You're listening to The Capital Table. Private capital markets have been evolving for many years, but never more so than in recent times. Take a seat at the Capital Table with leading experts discussing insights into the private equity and M&A worlds, and take away the knowledge you need to excel in a rapidly changing marketplace. We know this is one table you'll leave feeling full and satisfied.
Hello, everybody. Welcome back to the Capital Table. This is Steve Brady, partner and market leader of Transaction Advisory at Withum. In a previous episode, had my colleague Kevin Bodner with me, who I'm pleased to welcome back. And in that episode, we talked about the challenges of getting, your family-owned entrepreneurial business to market. And today, we're going to follow up to that and talk about positioning the business for a successful sale. So, Kevin, welcome back to the Capital Table.
Hey, Steve, thanks for having me back. Looking forward to the discussion.
Yeah. So for our audience, certainly as a potential seller, or speaking to the audience as if you were potential sellers, preparing the business for sale is really, really critical. And Kevin, I think your role in leading the investment bank here, certainly that's, a big part of your job working with entrepreneurs. I mean, kind of what are your global thoughts on that? And then let's get into some success factors for our audience.
Yeah, great. So listen, it's when you talk to a business owner about exiting and selling the business, it's all about two things. One is about how do you maximize the value of the business, and how do you reduce execution risk so you make sure when you start a process, you can get to the closing table. Because without that kind of preparation for that, you're really relying on hope that everything works, or hoping that everything works out. And relying on hope is really a bad strategy. So we take a lot of time up front to prepare companies, get them ready for this process. So, and what we've done is kind of laid out 10 factors that over time that we've kind of identified as 10 things that we kind of look at early on with the business owners to start addressing as we prepare for a process and think through what that process could look like.
Right. Again, for the audience, that the process is key, and we're going to focus on that and those success factors in this episode. Certainly a lot that goes into, as we touched on last time, preparing your company for sale. But Kevin, let's start at the top with number one in terms of those critical success factors.
Yeah, the first and probably the most critical is understanding value, right? And what a realistic valuation is. And I'm not talking about a textbook valuation report that we can get. I'm talking about really researching the market and understanding what companies are trading for currently at this time, and doing our research on what that, and comparing this company to the public companies that are in that sector, and researching what transactions have taken place, and managing expectations on what can happen, what should happen in the market when we go to market. We want our interests aligned with the seller's interest before we go to market, so there's no disconnect while we're in the market. And again, it's all about managing value expectations.
Yeah, it's so critical, Kevin, and certainly we all have conversations with entrepreneurs where those valuation expectations are kind of all over the map. But yeah, certainly, again, for the audience, a absolute place to start. The second thing is certainly making sure your historical financial information is accurate. You need to have the company ready for sale from the lens of what a potential buyer is going to look at that financial information. Certainly income statements and balance sheets and more M&A terms of quality of earnings and EBITDA. And we're not going to expand on those topics right now, but certainly a big part of what our practice does. But, the real point here is making sure the company's ready and has the basic blocking and tackling ready.
Right. Yeah, exactly. Because the financials are a foundation for everything we do. Even going back to valuation, right? You got to make sure you're basing your valuation assumptions based on real numbers that can be quantified and identified in through all the reports. So you really can't go forward and shouldn't go forward without a good understanding and comfort level of what the historical financials look like and should be.
Right.
And beyond that, then you that is also becomes your basis for kind of what the company putting projections together and talking about where the company can go from there. So the other thing, next thing we look at is all things being equal, where can the company be? Where's the company going to be the next year, 2 years, 3 years? And put together, working with the company and their advisor to put together a set of projections. And not just P&L projections, kind of a 3-statement projection. And by 3-statement, it's you're projecting out both the income statement, or all three, the income statement, the balance sheet, and a statement of cash flow. So it all flows into a nice financial model.
Yeah, with that, as you're understanding where your company's going, and as Kevin said, critical to having a successful deal, the next step we've laid out is building yourself an experienced M&A deal team. You need advisors around you to help guide you through the process. Certainly, an experienced investment banking team that understands the market you're in. And by that, I mean, is it lower middle market, what segment size wise, but certainly also has a knowledge of the industry sector that you're in. Not going as far to say you have to have a advisor who only works in your sector. I think, there's a lot of reasons and qualities that go into having an experienced M&A advisor, but certainly understanding the industry is important. But again, can really understand your company, help position your company, know the categories of buyers. So that, focuses on the investment banker side. But again, I said a deal team. So it's also an experienced M&A attorney, and working with an attorney who understands M&A is super critical to the process and being successful. You need that legal counsel along the way who knows the nuances and can work with your investment banker and hopefully the accounting team to get you a successful transaction.
Right. Those are 3 critical ones. And you also throw in the account and tax, some kind of tax expert. Because as I tell a lot of the entrepreneurs and families, it's not necessarily what you sell your business for, it's how much you get to keep. And a lot of that has to do with identifying your tax strategy early on so you can execute on that and get that ready. So your tax, your accounting, your legal, and your banker and M&A advisor are kind of the 4 critical outside advisors that you need to have and should have for a successful transaction.
Yeah, bringing up tax points out an important point for the audience again as we go through this, and this is the process of kind of moving down the field towards a transaction. But tax is a great example, and there are many others of the earlier the better. The earlier your tax advisor can help you structure things appropriately. And I don't mean 2 weeks before the time period we're talking about. Hopefully it's a few years, your operations advisors, et cetera. Again, we won't drill into that too far, but earlier the better is the real point there.
Yep, exactly right. And the other thing, also working on the kind of the theme of teamwork is also when you're working with the founders and owners is who the internal team is going to be. Who do they want to bring in and to understand at the company level to bring into the discussions to help with the process. Rarely can a owner do the whole thing by themselves. Often they're going to have to rely on at some point their executive team in part of this. And any buyer is going to want to meet and understand and know the executive team that's going to be building and running the business, working with them going forward. So we work with them to identify who the internal team, deal team should be and different members of management for that. You can wait. My experience is you don't have to bring them in early on. You could wait a little bit longer. But we should have them identified and know who they're going to be for different things. And from an investment banking standpoint, meeting the management team, understanding the strengths and weaknesses of the management team is helpful as you position the company again to the prospective buyers and targets that are out there.
Yeah, absolutely. Yeah, we're halfway through our 10 criteria for those keeping score at home. And as we move on to the back half, the first part, and it goes hand in hand with developing your projections, but really to emphasize defining your growth story, defining and articulating and being able to have realistic assumptions for how this business is going to expand. And the reason for this, certainly you can have a business that's solid and steady and find a buyer. But if you're trying to attract premium value, if you're trying to find a buyer that's going to frankly give you, a bigger check and part of the transaction, articulating your view of that growth story is super critical before it gets in their hands. Because again, the more thought that you've put into that, the more you can articulate the story of how the company is positioned for that growth, both in the external marketplace as well as internally with the infrastructure you have in place and the management team you have in place, et cetera. The more that's thought out, realistic, achievable, the better valuation opportunities you're going to have.
Right. And the other narrative that I push through them, I always go with kind of the scenario when I talk to an owner, I presume money is no obstacle. What would you do with it? Where would you take the business if you have every dollar you needed to invest in the business? Where would you take it? What would your strategy be for the next 5 years? And don't be kind of hindered by your some of the things that are holding you back now. But think really outside the box in growth. What would you do if you weren't in your current situation? So, and some really great, I've had some amazing conversations over the years with business owners about what they would do. And inevitably those conversations come out in management meetings with prospective buyers, and the buyers love to hear that and drill into that as part of the conversations.
Yeah, absolutely.
So the corollary to that is looking at risk, right? So you have all your upside. We've identified that is we take take an inordinate amount of time preparing the companies and looking at kind of what kind of risks are built into the business. Is your IT up to snuff? Is there a risk with your customer base, your vendors, regulations, employees? We look at all those, what risks are associated with that. And because we want to know up front what they are, so we can come back with some mitigating strategies or mitigating circumstances that could kind of that would show that, yeah, it's a risk and here's why, but this is why we think is really, it could be mitigated over the short term or whatever it may be. The mantra here is no surprises in the transaction. If you identify what the risk is and you have an open and frank conversation about it with prospective buyers, it's much better than them finding something in diligence with the gotcha. So it's all about being transparent and identifying them. Not saying we have to solve it all, but we just have to identify it. And that's a key differentiating there. We don't have to solve every risk. We're just going to know about it and identify it and have a conversation about it.
Yeah, that's a great point. I know certainly we've seen stories, and we're working on the buy side right now. Inherent in your comment on IT, but cybersecurity in today's world. We're working with a buyer right now, or one of their main concerns of the potential acquisition, and as they put it, with their words, a consumer-facing business. We want to make sure the cybersecurity protocols and processes and systems are in place. So, again, you mentioned technology, Kevin, but I'm really emphasizing the cyber piece of that. In today's world, becoming a bigger headline on every deal. So, really important for that to be one of the risks you identify. And then the next one, certainly KPIs and what KPIs are used in operating the business. What we're really saying here is this is going to become part of the narrative with potential buyers. And the more that you're able to demonstrate, here's the key criteria that we use to operate the business, and it's laid out in the context and kind of format of a KPI dashboard, again, that's going to give you a higher view from the standpoint of potential buyers, and therefore higher value and higher excitement in the deal. Many, entrepreneurs, family-owned businesses run this thing for, in many cases, obviously decades, and that's inherent knowledge to you. You walk in the door in the morning and you know in your head the 5 things that you need to check on to make sure the ship is running as efficiently as possible. But stepping back again, because we see that all the time. And again, that's
Right.
normal and it works fantastic. But you're now presenting the business to a buyer who's going to more likely than not take it to a more professionalized view, or at least bring in some resources that will want to know how that operates. And your KPI dashboard is the best way to demonstrate that.
Yeah, I say again, a lot of the family founders have been running the business for 20, 25 years. Like you said, it's inherent in what they do. But at the end of the day, there are 5 or 6 key things that they look at every day, every week to know the health of their business. And we kind of help them kind of identify what those are, how they're used, and why they're used. Again, a lot of this is educating the buyers, because a lot of the buyers aren't going to be industry experts until they've seen that deck, that sim, and are interested in this. Now, the strategic buyers they'll clearly understand it, but a lot of the financial buyers may not know the details yet. And part of our job is to educate them on it, to get them more comfortable, because the more comfortable they are with an opportunity, the more aggressive they can get in value. So at least that's the theory.
Right.
So the other kind of part that we go through as we get ready to go into market and before to get to market is we look at what kind of the key documents, governance documents that companies have. Companies that have been around for decades typically are lacking in some of these, because they just haven't looked at their operating agreements or things like that in 10, 12, 15, 20 years. So we take an inordinate amount of time of looking at the corporate governance side of the business with that attorney to help get them ready. We look at and gather kind of the financial documents that we need and create a virtual data room that we can manage with the different targets by releasing some information in different parts of the process. So it's not all out there at once. We have to be ready to have that and go through all that, make sure there are no surprises in any of these documents. So, but that's a key part of diligence is making sure we have the core documents ready, whether it's tax filings, regulatory registrations, environmental impact studies, whatever it may be. We have to have all that ready to go, because we don't want to cause a delay looking for data and looking for documents that we really should have had at our fingertips. So it's all about speed and ensuring closing. And once a deal gets the cadence going, you don't want to break that cadence if you don't have to.
Right. Absolutely. Yeah. So I think, that gets you right at the doorstep, and the 10th critical factor we've laid out for deal success cannot be understated. Maintaining focus on the day-to-day operations. So many times we've seen examples when the M&A process is a job into itself, which is one reason that having the right advisors and having the right internal resources at the appropriate levels and being able to certainly pay attention to the M&A process. But if you lose sight of the day-to-day operations, and again, unfortunately, I've seen this many times, and it doesn't have to be a disaster. Keep in mind, one of our earlier steps we talked about was projections and what's the growth plan. And, you do all that in month 1, and then somewhere down the road in month 6, 7, or 8, you're going to be, hopefully earlier, but more likely than not, month 6, 7, or 8, you're going to be sitting down with someone you're trying to close a deal on and be like, how'd you do last month? And again, if you're missing the mark on those projections, you're missing the mark on just even your historical run rate. It's not a good situation. Either diminishes value or can make deals, fall off the tracks.
Yeah, such a critical component is keeping your eye on the ball as you go through this process. As daunting as all this may have sounded, the first 9 pieces, you still got to find a way to run your business and keep the business going, which is why we strongly suggest building a internal and external deal team to help do some of this lifting for you, so you can maintain the business. Deal cadence, deal momentum. You don't want to have something that you could control, kind of take this off track. So,
absolutely. So, thanks to our audience for listening through these 10 critical factors. Appreciate continuing the dialogue on how to prepare your company for sale in the marketplace. Kevin, always a pleasure. Thanks for joining us again on the Capital Table.
Thanks for having me, Steve. Anytime.
Thanks, everybody.
Thanks, everyone. Bye-bye.
You've been listening to the Capital Table. For more information, please visit withum.com. Thank you for listening.